Good morning, everybody. It's Friday, which means it's 5 Facts Friday, which means the 5 things that happened this week that are hitting housing the hardest. I am out of time today, and I've got some traveling to do, and this is my only opportunity to record it. So I'm doing this off the top of my head, and I haven't been able to post in the links either underneath. But anyone who wants to challenge any of these, by all means, challenge it in the comments below. So fact number 1, the Land Registry released house price data for January 2023, and the month-on-month movement in house prices was down 1.1%. 1.1% doesn't sound very much. When you annualize that, it's like 13% annually. And in previous house price falls, 1.2% was the average monthly fall during the steepest fall. So actually, if that continues with that trend, because any one month on its own doesn't mean anything, I'm the first one to admit that. So you might say, well, that's not read anything into 1 month. It is the second consecutive month of monthly price falls. But you got to look at the bigger picture to see what the trend is. And most important thing to remember is that January Land Registry house prices are for transactions that were on average back in August before the mini budget, 5 months earlier. Okay, so we are still not yet seeing the effect of the mini budget on official house prices. We have to wait 2 more months for that. So that's fact number 1. Fact number 2, inflation surprised everybody. It was at 10.1%. It was expected to fall slightly to 9.9%, but it didn't. It went up to 10.4%. So 0.5% higher than anyone was expecting. Now, that high inflation, whether it's going up or down, if it's still high, is bad. For high inflation to be rising back up to the highest level of 45 years is really, really bad for the cost of living crisis, and really, really bad for the economy. And it's likely to necessitate further interest rate rises, which it did. We'll come on to that in a moment. And it is high inflation begets high interest rates, which increases mortgage prices eventually, not immediately, which feeds through into lower budgets for first-time buyers and any other mortgage buyers, which feeds through into downward pressure on house prices. Okay, so that's point number 2. Number 1, house prices came down. Number 2, inflation went up. Point number 3, the Bank of England, unsurprisingly, felt it necessary to raise interest rates 0.25%, which is what the market was expecting. But that has straight away fed into the SONIA swaps market, which means that mortgage rates are going to increase. Anyone on a standard variable rate is going to see their mortgage rates increase, and anyone buying is going to see it getting more expensive. So that too is a negative pressure on house prices. Fact number 4, I am borrowing from Chris Watkin's stats show that was published on the if you go to propertyindustry.com, you'll see the stats show story there, and in there you'll see the video and the graphs. And the one graph that stood out to me was the one showing that the number of price reductions in the week that he was reporting, which was last week, was the highest for the last 7 years. Very high numbers of price reductions. So that is a good and encouraging sign that unrealistic sellers are dropping their prices. It is downward pressure on transaction prices because people only advertise reduced prices when they need to sell and aren't getting any interest at the price that they were at. They were displaying it at. So that's 4. House prices down in January, inflation up in February, interest rates up this week, and the number of advertised house price reductions, asking price reductions, is up at the highest level for 7 years. Now, the number 5, you might challenge me on this as not being a fact, but I want to mention the banking crisis, because that's the elephant in the room about what's going to happen. And it's calmed a little bit this week, and it looked like maybe it was a mini banking crisis that was going away. Let's hope so for people who are looking for stability. But then yesterday, HSBC's share price took a battering, as did Deutsche Bank. Deutsche Bank is a monster, the sort of like Credit Suisse, and it took a 10% batter on its share price yesterday. And these are facts that you can verify. So in terms of trying to figure out whether the banking crisis passed or whether there's more to come, it's difficult to read, but these things happen slowly. And this is not a fact, this is my opinion. My opinion is that the banking instability and banking turmoil is not yet over. And the ripple effects of Credit Suisse being taken over by UBS and First Republic in America, we have not yet seen the end of the ripple effects of those banking situations. Although, no immediate effect on the housing market. But I know a lot of my followers have been worrying about how safe is our money. And I can't answer how safe your money is, but all I can do is report on the developments in the banking situation that are happening and worth watching. Anyway, those are 5 facts. I have opened up the private live Q&A first-time buyer group to all buyers. So it's no longer a first-time buyer group, it's now all buyers. And I will shortly be announcing the next date for a live Q&A where basically it's all just about your questions and about me answering every single question, every single relevant question that I can and have time to. And so far, I am managing to answer 100% of the questions that come up in the private buyer live streams. If you want to join that, go to buymeacoffee.com/MHWC, which I'll put a link to below, and you'll see the membership there that you can join if you want to. Thanks for watching. Have a great weekend. Happy Friday. Let me know if you think I've missed any more impactful facts from the week on the housing market, right? I'm always happy to be challenged. But all the challenges I'm getting so far are like, oh, you're just picking the facts that suit your story. Tell me which facts I've missed that change it, right? Those are the facts I think have the biggest impact on the housing market. So let me know what you think, guys, and thanks for watching. See you on the next one. Bye-bye.